Let us now clarify some of the myths. Myth number one: only experts can invest in mutual funds. The fact is, even a kid can invest just by understanding mutual funds. It's so simple and easy. That is the essence of it. Second is, a mutual fund scheme with lower NAV is better than investing in higher NAV for other mutual fund. So this is generally people go wrong. So let's say you take an example of 10,000 rupees you want to invest. So let's say scheme A NAV is 20 and scheme B NAV is 100 rupees, and they both schemes invest in the same portfolio of stocks. So let's say then you will get 500 units for scheme A and same 500 units for scheme B. You should divide the invested amount with the NAV, and say both have increased its value by 10%. At the last you will get in each case 11,000 rupees only. So it depends upon the number of units you purchase, not on the NAV rate. Third is, mutual funds are only for long term. It's not the scenario, but if you keep for a long term, it's very best. But there are very short term schemes where you invest in a very few days, few weeks, and few years also. Mutual funds invest in stock market only. Mutual funds invest in bond market, corporate bonds, government bonds, and money market instruments like treasury bills, commercial papers, or CDs. So no, it doesn't invest only in stock market, it invests in debt markets also. Whether we need a large amount of money to invest? No. As per today, you can invest through SIP, systematic investment plan, with as little as 100 rupees or 500 per month. Scheme with higher NAV has reached its peak. So we just generally think that if it's a higher NAV, that means that scheme will not perform further. It doesn't mean that the fund is expensive. Higher NAV just indicates a good performance of a scheme over the years. Buying top rated mutual fund guarantees better return. No. Mutual fund ratings are based on past experiences, performances, and are subjected to market fluctuations. A 5-star fund now today may become 2-star rating, or vice versa, over a period of time. So we have to watch for it. You have to need to have a DEMAT account to invest. DEMAT account is not needed for most of the mutual funds except for exchange traded funds. So that's all for today. Kindly subscribe and press the bell notification for personal finance manifesto. Thank you.